Hi there, Stan the Annuity Man, America's annuity agent, licensed in all 50 states, wearing my YouTube-inspired swag gear, the Annuity Man. YouTube's been very kind to us. We love them because it gets the message out here of how annuities should be viewed, analyzed, and considered for purchase, not for the whiz-bang, bad chicken dinner seminar, expensive steak dinner seminar, misinformation that you hear either locally or on a radio show on a Saturday morning. Those are just crazy in most cases, not all cases, but most. Today's topic is a good one and so important because people are making mistakes when they purchase because they believe something that's true that's being told to them that's really not. Annuity agents or advisors are either not detailed enough, don't really know, or playing semantics, word games, when they come to talk about income riders. And the topic of this little soliloquy is income riders are not actual yield, okay? We're going to get to the details of this. Hang in there with me because this is very important, especially if you're looking at an income rider type solution. I'm going to explain what that is after this. Okay, let's talk about income riders. Now, if you can go to my site, I've written a book on income riders. You can download it. I don't know what my tech people say. In other words, you can read it for free. I don't know what that means. PDF, I don't know what all that is. But you can go to my site at theannuityman.com and type in the search bar income rider and you'll see it pop up and you can read it. And we've done a ton of videos on income riders, just the basics, but here's the basics of an income rider. An income rider rides on top of a deferred policy. Typically that policy is either variable annuity or index annuity, fixed index annuity. We don't sell variable annuities, nothing against them. The reason is the income riders attached to fixed index annuities are typically providing a higher contractual guarantee. Let's do a visual. If you draw a line down a blank sheet of paper, this side is the indexed annuity side, the accumulation value. We don't care anything about that. That's a CD product, regardless of what anyone tells you. But over here is the income rider. That's the guaranteed lifetime income that's going to start at a future date. Now, you can go to my site at theannuityman.com and run a quote. We have the best calculators in the world for income riders. You can run a quote, either lump sum or reverse engineered, for that income rider guarantee, whether you need income to start 1 year, 2 year, 3 year, all the way up to 10, 15 years, whatever, because I asked two questions. What do you want the money to contractually do? And when do you want those contractual guarantees to start? And if you say, I need lifetime income, I need to start in the future, whatever that future date is, 2 years, 3 years, 4 years, 7 years, then an income rider is going to be quoted, okay, along with a couple of other products. We're talking about income riders. When I say income rider percentage growth is not yield, here's the sales pitch. Mr. Jones, you can buy this indexed annuity that's going to get market returns with no downside. That's false. That's a CD product. So that's the first falsity you're going to hear. Oh, market upside with no downside, sir. Look at what happened if you known it 10 years ago. Wrong, okay? But this side, the income rider side, is monopoly money. It's a phantom account that can only be used to calculate the first income payment when you turn on the lifetime income stream. Now, on this side, remember I drew a line down a blank sheet of paper? On this income rider side, that income amount is going to grow while you're waiting to turn on the income stream, and it's going to have a percentage, and that percentage could be 7, 8, 10, 12%. Before you get up, excited and run to the refrigerator and grab 2 beers instead of 1, that's not yield. That's not Jimmy Carter yield. You can't peel off the interest from income riders. You can't cash in that amount from income riders. You can't transfer that amount from income riders. And state guarantee funds don't back up the amount of income riders, only the accumulation value. It's a phantom account that you can use for lifetime income. Doesn't make it bad as long as you understand what it is. But every single week we get calls and calls. Well, I looked at your MIGA feed, and MIGAs are the annuity industry version of a CD. Okay, I looked at your MIGAs and those percentages, but this guy locally could get me 9, 10, 12%. That guy locally lied to you, okay? What he was talking about was an income rider. And an income rider, again, is a phantom account used to calculate your first income stream. There's nothing wrong with it at all, because if you said, Stan, I need lifetime income and need to start in 7 years, Income writers will tell you to the penny what that lifetime income stream is going to be. The other thing I'd like to warn you about is when people say, well, in addition to that 12% growth on that income rider, you're going to get a 22 or 25 or 30% upfront bonus. Let me breathe real quick. Please don't be that stupid and gullible to think that a for-profit business life insurance company issuing an annuity is giving away free money. Upfront bonus is candy for the stupid. Please don't be the stupid, okay? And if you are the stupid, don't go to Vegas and sit at the table because they're going to take advantage of you. Upfront bonuses, not real, okay? Just part of the overall contractual guarantee with 100 pennies in the dollar. And income rider percentages are not yield, like yield on treasuries or yield on CDs or yield on bonds or yield on multi-year guarantee annuities, the annuity industry version of a CD, okay? That's yield. Yield means you can take the interest out and not touch the principal. Yield means it can grow and grow and grow, and at the end you can take all the money, including the interest rate growth. That's yield. Income riders, not yield, because you can't cash it in, you can't peel off the interest, and you can't transfer it. Doesn't make it bad. It just makes it different, and you have to understand how income riders work. I would encourage you to go to my site and do a deep dive at your leisure. Spend as much time as you want watching my income rider videos, reading my income rider owner's manuals, going to my income rider calculator and running quotes to your heart's content. And we're quoting all carriers for the best income rider guarantee. Now, I will tell you this. They are attached to index annuities, but the quote you're going to get is the contractual guaranteed income rider. We're not going to talk about caps and spreads and participation rates and all that stuff. We're only going to show the contractual guarantees of the policy, the contractual guaranteed lifetime income that income riders provide. So when you're shopping income riders, you're shopping for lifetime income riders. They're not called yield riders. They're not called interest riders. They're called income riders because they're for income only. So don't be bamboozled by the high percentage this person is showing you. In fact, a lot of times, the high percentage they're showing you, that specific income rider isn't competitive. It's all a bunch of shiny things. Don't be distracted by agent, sales pitch, shiny things. Look at the contractual number, period. Okay? It's pretty basic. My name is Stan, the Annuity Man. That's the truth about income riders and the fact that income riders are not yield. Hit the subscribe button. I'll see you on the next Stan the Annuity Man, You Too video.